Has Rockhampton already peaked? Because the data says otherwise. Everyone seems to think the same thing about Rockhampton right now, that it's already had its run. Prices have doubled, growth has been strong, and most investors assume they've missed the opportunity. But when you actually look at the data, the story is very different. In this video, I'm going to break down what's really happening in the Rockhampton property market, and whether this is a market that's already peaked or one that's still tightening beneath the surface. Before we get into the numbers, it's important to understand something. Most investors don't make decisions based on data. They make decisions based on what they've heard, what they've seen, and what they feel comfortable with. And this creates bias because once a market has already grown, people assume it's finished. But the truth is, property markets don't work like that. They move in cycles. And more importantly, they move based on supply and demand. So let's start with what most people are looking at, price growth. Because yes, Rockhampton has already seen significant growth. Over the last 5 years, prices have increased by around 103%. Over the last 3 years, they've grown by roughly 67%. And over the last 12 months alone, they've increased by just over 20%. The median price point has moved from around $250,000 to roughly $590,000 today. So there's no denying it. This market has already moved. But the key question isn't, has it grown? The real question is it still supported by the fundamentals? Now let's look at supply, because this is where the story starts to change. Back in 2019, there were roughly 1,200 properties listed for sale in the Rockhampton regional area. Today, that number is less than 400. That's a massive reduction in supply. And that's not a normal market. That's a market where supply has been completely absorbed. Now let's layer in demand, because supply on its own doesn't tell the full story. Over the same period, the average number of buyer clicks per listing has increased from around 3,000 to over 7,500, peaking at around 8,700. That means more people are competing for fewer properties. At the same time, the number of buyers actively searching has increased. Rental demand has also increased, and the renter activity has risen by over 8% in recent months. So demand hasn't slowed. It's increased. Now let's look at how quickly properties are selling. Back in 2019, the average days on market was around 67 days. Today, it's closer to 34. And at one point, it dropped to as low as 14 days. That tells us something. Properties are selling faster, which is another sign of a tightening market. Now let's look at the rental market, because this is one of the clearest indicators of pressure in the system. Back in 2019, vacancy rates were around 2%. Today, they're sitting at around 0.6. That's extremely tight. And when vacancy rates are that low, it means that tenants are competing for properties, which pushes rents higher. Now, here's where we add some balance. Even though rents have increased, capital growth has actually outpaced rental growth. Over the last 5 years, rents have increased by around 60%, but prices have increased by over 100%, which means rental yields have compressed. Currently, rental yields sit at around about 4.6%. Now, this doesn't mean the market is bad, but it does tell us prices have moved faster than income, which is something investors need to be aware of. So what's actually driving all this? Because it's not happening in isolation. There are some very real fundamentals behind it. There are several major infrastructure projects underway. The Boulder Creek Wind Farm, the Rockhampton Ring Road, and the Rockhampton Park redevelopment. These projects bring jobs, economic activity, and long-term demand for employment. Unemployment has fallen from 9.9% in 2015 to around 4.6% today. That's close to the national average. The local economy is improving. In addition, Rockhampton's population is expected to grow by around 15% over the next 15 years. That's roughly 13,000 additional people. And more people means more demand for housing. So when you put all this together, the real question isn't, has Rockhampton already grown? The real question is the supply-demand imbalance still there? Because that's what drives markets forward. And based on the data, supply is still low. Demand is still increasing. Vacancy is still tight, which suggests that this market is becoming more competitive, not less. So is Rockhampton overvalued, or has it already peaked? The answer is, it depends on how you look at it. If you're only looking at past price growth, then yes, it's already moved. But if you're looking at underlying fundamentals, there are still signs of pressure in the market. And that's why it's so important to look beyond headlines and focus on the data underneath the market. If you'd like help analyzing markets like this using a data-driven approach, you can book in an initial strategy session using the link below. And if you found this helpful, make sure you like this video and subscribe to the channel, because on this channel, we focus on data, strategy, and long-term property investing, not hype. Thanks again for watching. See you in the next video.